A very special guest. We've got Ajay Kanwal, the MD and CEO of Jana Small Finance Bank, who's joining us right here in the studio after that fantastic evening where the Chief Economic Advisor spoke, very with a lot of clarity on the kind of perspective, that the government has right now on the slowdown, on how things are expected to shape up.
Which, by the way, has sent shockwaves all across and made it to all and every headline this morning. But yeah, anyway.
So share with us, Ajay, what were some of the key highlights from the evening?
So I think the first very important one is the event was about really sharing customer inspirational stories. And to me, that's the real highlight of the event because, if you see the customers and their journeys, then that gives you a lot of motivation. The customers really went through really life-threatening moments. You see the customers had sometimes no money and, didn't know what the future looked like. And then when you look back at yourself and you get a lot of humility saying, imagine these folks who have come such difficult times, our problems hardly exist. So I think my first takeaway from yesterday was really there is a lot of entrepreneurship in India. There is a lot of need for capital. People really want to work hard and grow. They just need the right platform. And so that was my first key takeaway from customer stories. Made me feel very humble and honestly to do a lot more. So I must thank your network too, because I think bringing those stories live makes a lot of difference to not just the customers, but all the folks watching them.
No, would you say in the chain of things, access to credit is more important sometimes than cost of credit?
You're 100% correct. So I must tell you from my experience, there are two things about credit, One is access to credit. Bank credit formal credit will always be cheaper. You can argue whether it should be another 2% higher or lower, but in the end, relative to informal credit, formal credit will always be cheaper. The second thing in our business, in financial inclusion, is also the respect side. So if you really go to a money lender, how are you treated versus when you go to a small finance bank or a microfinance institution? And you can see the difference as you go more in the rural areas. It's still prevalent that if you borrow from a small finance bank, you feel like you're working with a bank, you're working with professionals, you're treated well, you're a normal customer. And you feel, even in a loan side, there is an angle of trust. Normally you talk of trust from a liability side, right? I'm placing my money, I would trust the bank. Actually, even the loan side, there is a lot of trust. They'll charge me exactly what they said. I can prepay when I want. When I go, the next loan will be available. I'll be treated very well. So there is a huge element of that. So I think access plus the way you deliver credit, at least in the financial inclusion space, very relevant. And when you're dealing with women, even more relevant, which is 99% of our customers.
We are going through a patch of huge agrarian distress. Rural economy is in shambles. Slowdown, before it will hit companies and individuals, high tax bracket, it will hurt the temporary workers. Parle-G has knocked off 10,000 people. I've been told auto companies have knocked off about 4 lakh temporary employees. Some would argue that, look, the bottom of the pyramid is also going to shake. But your data point, the analysis, what you showed us yesterday, you are not feeling the heat. Is it a matter of time, or you think the segment which you represent will remain immune?
No, I think nobody will be unimpacted, so to say. I think it will be degrees of impact. And I think as time passes, it could probably hit us even more or probably get more impacted than we are today. Right now, impact is limited because, like I said, our need for day-to-day, I need a plumber, I need electricians, I need a driver, I need a maid. None of those have changed. There is no cost cuts there. There is no saving there. You're probably having your one less meal in a restaurant, or you're buying the next, next suit I'll buy maybe after a month. You're probably postponing more discretionary purchases. So I don't think it's reaching there. Second, we have tried always now to move away from just being a consumption-led bank to also being a productive-led bank. So I'm giving money to small businesses so they can make money from my money. And I think in this slowdown period, it is nice to focus on that because this small entrepreneurship, frankly, is huge space. There is just, you saw yesterday, this lady started with I was supplying 3 tiffins, made it 8 tiffins, then 15 tiffins. And frankly, she wants to borrow more because then she can make it 30 tiffins. So there is entrepreneurship at the bottom of the pyramid for sure. That remains live.
But are small borrowers high on credit discipline?
Very good question. Majority are. So, we began relending, so to say, after demon in November 17. Our delinquency rates, which is not NPA, delinquency, which is even more a tougher yardstick, is at 50 basis points, 0.5%. And couple of reasons. See, the small borrower knows, I'm sorry, got a bit of a cold. He will come to you for the second loan. He needs you. So that's rule number one. Second, your loans are not very large. So for example, our basic loan starts with about 30,000 rupees, spread over 2 years. You have to pay about 1,600 rupees a month. And I tell you, 1,600 rupees, if you go toward the north side, a daily laborer in the farm gets about 600 to 700. So 3 days of working in the farm can actually pay back your EMI. You go more toward the south, you probably get 400 to 500 rupees of daily wages. So that's about 4 or 5 days of work. So it's not a big number. So they can pay you back. But imagine that is his only source of, so to say, capital or loan. So it works. They pay you back. Where it got challenged was where you have vested interest. Where saying, okay, let's get together and not pay, and I will manage it for you. So I'm either some local strong figure, and I either make money from you to say that, or I do it for my probably creating some amount of positivity if there is any amount of.
But in this tough environment, do you suspect that the discipline will be challenged eventually?
Depends on. See, there's a very interesting thing about our business. We have 35 lakh customers. We meet every single customer by face every month because our own employee goes to collect the installment. So our ability to connect and educate is very high. Now, as long as the connect remains high and we don't over leverage. So why is my first loan 30,000 and not 50,000? Because I think we should start small, train him on a credit habit. Once he learns that, see whether he has the ability, and then give him the next loan. So if I don't over leverage him, the connect remains strong. I think we can pass through this difficult phase also. I don't think the 0.5 will remain 0.5, but we can adjust to a 1% also. As long as it doesn't go beyond that, we are fine. So
the way I look at a bank is in India, it's a credit-starved economy. You can easily grow. You can grow at 100% also, provided you want to grow. I always ask bankers that don't tell me at what rate you are likely to grow. Tell me how many applications do you process and how many do you reject. Because ultimately that is going to be differentiating good credit from bad credit,
Correct.
Good borrower from a bad borrower. 35 lakh customers, it's a big number. But I'm sure the number of loan applications which you receive and which also is robotic, I looked at the demo yesterday, fantastic stuff. Can you throw more light on that?
Yes. So, Nikunj, very interesting point because roughly the reject rate we have seen climb in the small borrowers.
Okay.
Which does show that, and when I say reject rate climb, it's not because of bad performance, it's probably at sometimes we think that we cannot allow them more leverage.
Okay.
Because remember, as a
management.
bank, we have to be more responsive. I think he's already borrowed enough.
Okay.
If I lend him more, he will be happy, but later both of us will be unhappy. So my bias is to say no. So I've seen that we have been very careful and I can see the reject rates are hovering between the 50 or 60% now.
Okay.
For the unsecured borrowing. What is slightly troublesome more than this, because I think in unsecured borrowing, you do get a moment where people actually think that let me apply 2-3 places and see who gives, so you have a leverage issue. So we have to be careful there. But very well contained, I must say 0.5 holds very well even today. On the secured side, where people are borrowing against property, etc., even there I'm seeing a 50% reject rate, which is a bit bothered, saying you have a lot of capital, you have built an asset, you have a business, and your cash flow should allow you to then borrow from us. I can see the stress in the SME space, largely, where I wouldn't expect such a reject rate. And we are largely a cash flow. So our first bias is cash flow. We do unsecured loans. Only when the loan size gets bigger would we like to see collaterals. That's how we would work. I can see a bit of stress there, for sure.
Is there a pattern between north versus south, south versus west? There's a pattern which is clearly there at the low-end borrower. They don't want to default. It's like buying your dream house. You don't want to default. You don't want bank to take your house back. Is there a pattern? I'm just curious to understand. North, south, east, west. We hear different geographies have different lending and borrowing patterns. Is that true?
I felt so in the 90s. We used to always have, South is less delinquent than the North.
I used to hear stories.
More discipline. I knew this answer before.
But I must be like, in the spirit of full transparency, I'm a North Indian myself. So,
high five to that. I think all of us here. Yeah.
But I don't see that. See, I think it's more about, and I must say that I've learned a lot about the human side of banking. Okay. If you can connect with the customer, and if you're not trying to grow very fast, I think South and North are equally good.
Okay.
I think where you've tried to over leverage, or you're a bit more lax on where you want to grow, it makes a difference. I want to give you a simple example of the soft side. So very recently, we have a lot of good customers. These are small businesses. They're paying us very well. And we went to the bureau and checked their records. They look also very brilliant. So we said, hey, these guys are ready for the next loan if they are interested. But then one of our managers said, maybe the guy who goes to collect, let's ask him, what does he think about the customer? So bureau is beautiful. My record is very nice. And in all analytic language and behavior,
all the tick boxes.
All the tick boxes. So give him the next loan if he wishes. So we said, okay, very good idea. We took 2,000 customers. These are small businesses, so we match our collections to their cash flow. So they literally go once every 2 days. So they'll come to the shopkeeper and say, my EMI of 700 rupees. It's very easy for him to pay 700 rupees every 2 days rather than pay the 7,000 in the month end. So we asked this guy, and this is a month ago. Out of 2,000, the collectors tick box only 600. So because he goes and sees him every day, he says, sir, दुकान में थोड़ा अभी स्टॉक कम हो गया है, कस्टमर कम आ रहे हैं, सर अभी हर 2 दिन में पैसा नहीं दे रहे हैं, he is asking me to come the next day. See, there is an element that we can see, which is really the end point of how the customer is behaving, which data is not giving. I mean, if you think of Jana Bank, the end is to become a community bank, right? And the community bank will use all the analytics. We are also using robotics now. But there is a real front end person who's seeing the customer once every 2 days, ask him, is the customer okay? Should I give him more money?
And no machine can replace that.
No machine can replace that.
True.